it's about time to get a house. So, oh, Jesus. Ladies and gentlemen, welcome to episode 242's. Let's start again. Ladies and gentlemen, welcome to episode 264 of Sharp Stories. Did you know it was called Sharp Stories? I don't think they knew that, Al. I don't think I've said that before. This week, we're going to dive into a little bit different level. We're always hearing we need density. The price of homes are up. It's crazy out there, yada, yada, yada. But we don't dig into the backside, if you will, of the equation, meaning how much do you actually need to earn to purchase said real estate. So today we're going to dive into the back end of the transaction, traditionally where your mortgage broker or your mortgage specialist would be involved. I'm not trying to substitute those wonderful guys and gals today, but I'm just going to layer in a little bit of their equation just to give you what I believe are tight ballpark numbers. I'm not going to say these are exact to the penny. I've used a variety of different websites putting this together, which I believe have all come together in a perfect web of episode 264 goodness, which I don't have a name for yet. But today, how much do you need to make to buy Vancouver real estate? So let's take it away. To start, the mortgage details we're going to run with today, a little caveat, we've got a 6.29% mortgage on a 5-year term, 25-year amortization, which brings us to an 8.29% stress test, as we all know, for our protection is in place. I've used my beloved RBC mortgage calculator. I have bugged mortgage brokers about this, and I've also used RateHub mortgage affordability calculator today to try and get to the bottom of what it actually looks like, what you need to be earning in that beautiful job of yours to get out there and purchase real estate in a traditional way. No trust fund, no fresh money in, traditional way. Work hard, earn, and spend. So without further ado, we are going to start with property number one. I have 3 properties plus a bonus property for us today, which is going to be quite interesting. So on property number 1, Al, first photo here, we have unit 308 at 7228 Adira Street, which is Shannon Wall Center. Adira House, it's called. Completed in 2019, and this is $1 million condo. Okay, so $1 million bucks, the first number. Purchase price $1 million. 2-bed, 2-bath, 816 square feet. One parking. Where are we here? Running through. Good plan, good exposure. It looks nice. It's clean. I'm subjective on who they used for these renderings, but that's a whole other story. A nice 816 square foot condo. As you can see from some of these photos, you do have air conditioning, so it's good. There's amenities close by. You're right by Granville, Artery Street downtown, so a good comp in a good building. So let's break this down. $1 million purchase. Obviously, we're just going to assume we need 20% down. $200,000 after tax dollars. How do we get that? That's usually the biggest pain in the equation here. But let's assume it's sitting there waiting to be spent. $200,000 down, $800,000 mortgage. Stress tested at $6,254 a month. Actual cost of mortgage, $52.57. Now, our beloved mortgage brokers and specialists like to sprinkle in some details like your property transfer tax, like heating, like strata fees. I think they use half the strata fees. Anyway, brings us to roughly just under $7,000. I think just about $7,000 a month. I was going to say $7,050, but I think they actually use half the strata fees. So anyway, we'll say ballpark $7,000 a month cost. For that pre-approval, you are going to need to make 200 smacks a year. to achieve said pre-approval. You've also got an $18,000 property transfer tax on there. So that is that under today's rates. Number 2, we have 3595. We're going to jump from South Granville there, and we're going to jump all the way over to Grandview Woodlands, East Vancouver. We're now in the housing market. $2 million. It's about time to get a house. So, oh, Jesus. Do you remember these? That's
size 9s. Too small, not Crocs. Sorry to say. What are we talking about today? Depreciation price?
I wish. That's next week.
What's the conversation?
Don't worry about it.
What's the conversation?
Doesn't matter.
I've got value to add. You
don't.
Other than a pretty face.
Today we're discussing how much you need to make to be able to buy. So the actual breakdown of income to purchase flexibility.
This has got a 25-minute Jay McInnes babbling on written all over it. I'm out. Enjoy.
Thank you for your close-up. I assume you got a close-up of those size 6s there.
I did. Flip that 6 upside down, sir. Sit!
Okay. We'll discuss cutting that out later. We move gracefully now over, as we are now in the $2 million price point, gracefully over to East Vancouver. So Grandview Woodlands, as I was saying, $35.95 Hull. This is a 2014, 2,500 square foot house. As you can see here, we're sitting here on a 44 by 127 lot. Again, built in 2014. So $2 million, 20% down. So now you've got $400,000 after tax dollars down. Again, these equations, a lot of the people, when we're again talking about, I keep saying actual people, I don't know what else to say. People that work and need the income to support the cost of living here and the cost of all these and getting pre-approvals with the banks and all that sort of stuff. The biggest roadblock at the front end of all this is getting the deposit down, these big numbers. So again, tying back to, you can wait and buy that dream home, or you can buy as quickly as you can. I know all the market circumstances that people are going to talk about aside. Buy as quickly as you can, pay down, build equity. You have that incremental growth when the market goes up that you are benefiting from, using the capital gains benefit tax exemption to your benefit and hauling out these large sums of money as the market progresses. And that's how most of these people get these huge lump sums. It's simply buy, hold, flip, but not flip. Flip is meaning something else, but you know what I mean. Buy, hold, increase, sell, re-enter, hold, increase, sell, re-enter, and so on. So you're saying, how the hell are we going to get a $400,000 down payment, after tax down payment? Well, in this equation, this is kind of the minimum, let's say, you're going to need, and you can't just jump into a $2 million dream home, and there's a few different ways to do so. Mom and dad, outside money, or, of course, work and play the game all the way up. So, we are back, $2 million, $400,000 down, that's 20%. So we're mortgaging $1.6 million at a stress test amount, that's $12,500 a month, to actually pay $10,500 a month in your mortgage. Broker sprinkles, property tax and heat. Obviously there's no strata fee here. So now again, we are at $13,058 a month, which means an annual income of $400,000. So remember, they're using gross, so $400,000 is long before all of your taxes and stuff like this. I also did these equations, ballpark, naturally. And of course I didn't do the 400, so we're not gonna talk about that yet. But they're gonna use your gross income on this, so before all your nice red envelopes to the government. So, $2,400,000 income to borrow $1.6 million on that $2 million purchase. Now, number 3. We are now at, where are we? We're at 239 East 26th Avenue in the bustling, not too newly, last 10 years, popular Main Street area. We are now at a $3 million purchase price. What does that get us? That gives us a 2022 home, 1,850 square feet, 3-bed, 4-bath, depends how many kids you have if that's gonna work, but it's nice. If you have the normal, what's the normal family? 2 kids? 1 kid is probably becoming a lot more normal. And then you've got those crazies that go more than that. 25 by 117 square foot lot. As you can see by the photos here, very cool little house, little under home, built-in garage, totally open concept. Little backyard, little cat in one of those photos, Al. These must be responsible, well-minded individuals that live here. So anyway, $3 million purchase, 20% down, $600,000 down payment. So $600,000 cash, how are you gonna get it? Again, you've gotta play the game. Most people will never have that one lump sum of money sitting there unless they have points of leverage that they can lean on, giving their investments time, and so on and so forth. So we have to start somewhere. Most people will not, a lot of people will not get to this level, but most people will most definitely not start at this level. So don't let these 20% deposits scare you. Start small, work our way up. You've got time. $3 million purchase, $600,000 down. That is a $2.4 million mortgage. Stress tested, that is $18,763 a month you need to qualify for on just the mortgage, but it actually works out to a $15,771 payment. Property tax and heat. Your now total needs to be $19,345, roughly speaking, a month to sustain. And for that, in the bank size, you are required a $550,000 annual income. A very large number. I think average annual in Vancouver is 80 something. So you can see where we're going with this. And you can see also, well, how does my neighbor can't possibly make that much money? How is he doing it? Time, play the game, keep the ball going. Again, very few people are just jumping into this as their first. Time has to be on your side. So that is it. That gives you an idea. So from $1 million and for a $1 million purchase and a $200,000 required income a year, all the way up to a $3 million purchase and a over $500,000 income a year to sustain these traditional mortgages at these rates with 20% down. Now the bonus, the fun one, we're just gonna ratchet it up a little bit here. A $10 million purchase. Now what the hell does that look like? I can assure you that 9 out of 10 $10 million purchasers are not running on the equation we're about to discuss. They're not needing the income to support the mortgage. There is more leverage being had here. They may or may not take a mortgage. Probably at these rates they wouldn't, because it doesn't make sense. If the rates were 1 or 2%, there was a lot of people borrowing the money even if they didn't need to, because it made more financial sense to take the loan. But 3309 West 19th, Dunbar, Owl. 2700 block of West 27th is where yours truly departed Dunbar once, and hopefully not for all, but once for a very long time. Now the interesting thing about this, when you dig into it, Take one guess. These guys started a few days before. So they started at 15 million. So they have come down $5 million. They've come down a third in price. They have been on the market since 2 years after it was built. It was built in 2015. Okay, they're at 10 million bucks. This is a 5,271 square foot, 4-bed only, which is interesting. 6-bath house built in 2015 on a 71 by 121 lot. Views, the whole nine. They have in total been on the market, drum roll, for 1,863 days. But they're getting there, okay? They are putting in that hard yard, and they'll get a price at some point. What it will be, we have no idea. The last 170 days, they started at 11 million. They're now back down to, not back down, they're now down at 10. Anyway, the photos, it is what you would expect. Nice house, big house. Not many people need 5,200 square feet, especially with only 4 bedrooms, but it is what they built. And unfortunately, they haven't been able to get rid of it yet, but they will one day. I have faith. Nice finishings here. I wouldn't go tile flooring myself, but that is irrelevant because I'm not their buyer. Anyway, 20% down. 2 big ones, Al. $2 million after-tax dollars in the bank for an $8 million mortgage. Now, the cost at stress test rate, 8.2 on an $8 million mortgage is $62,544 a month, but you're only gonna have to pay on that 6%, 6.2, so that whittles you all the way down to 52, a measly 52,571 a month. Property taxes on this home, 33,942 a month. Broken down monthly, plus heat. Again, I'm gonna say $200 a month. It's probably a lot more, but summer months, we're not gonna use the heat unless the kids crank it because they think it's fun when you're out of the house. That's a whole other story. So we are looking at $65,572 a month to sustain the lights on and the heat on at this $10 million home by the traditional sense. So again, $2 million down, $8 million mortgage, $65,000 a month. You would need an income of $2 million before tax to get approval on this from your bank. As we know, $2 million, we've got the average tax rates here, which we are going on, which I was going to go in a different direction, but we didn't, but I've got those numbers anyway. Fun fact, on a $2 million income, you are at a 51.23% average tax bracket, meaning you're handing the mass majority. $2 million income, you are left with $971,122. That sounds like a lot, and it is, but it's highway robbery. You make 2, the government takes 1.1, you say thank you and goodbye. So anyway, this is not a politically oriented thing. Also, fun fact, on that $10 million home, property transfer tax is $278,000 on top of said equation. So there it is. That's a little bit of insight into what you actually need, what the bank, what your broker actually needs to see. If there's any wrong numbers in there, please comment below and highlight where I messed up. But I'm pretty sure I'm pretty close with all the things we've double and triple and quadruple checked on this. So again, RBC Mortgage Broker or Mortgage Calculator is a good one. Rate Hub Mortgage Affordability Calculator brings in the difference of all the costs as well, and then incorporates required annual income, what they will need to see in order to lend out with the numbers. So there it is. That gives you some insight. Go use those calculators to get a good idea. It's always better, obviously, to contact a mortgage broker or mortgage specialist directly. These are very ballpark details, depending on your history with them, depending on other assets held. other sets of income, yada, yada, yada. These numbers can and will move around. They will be manipulated to your benefit based on your individual circumstance, naturally. But just to give you an idea what it looks like to own a $1, $2, $3, and $10 million property in Vancouver today. Al, time. 20 minutes. Not bad, I thought it'd be worse. Thank you, and until next time, happy hunting.